Greetings everyone, welcome aboard. Joseph James, SchoolTrade.com. And guys, we've got the second video of this three-part series on tape reading. Now guys, before we talk about the next section here, let's recall where we left off on our first video. Remember, there's 3 videos part of the series. Now in our first video, the first step, we wanted to find a price level. Now price levels are going to be the foundation of everything we do. We need these price levels to be what we call high percentage, right? Highly consistent. Now my favorites are the high of day, low of days. I love double tops and double bottoms, guys. I like price levels where the most amount of people are going to be watching them. So the high of day, low of day, great level because everyone has the same high of day, low of day as everybody else, right? Everybody has the same high of day, low of day, whether you're trading a 30-minute chart or whether you guys are trading on a 30-second chart. So that's why I like to use high of day, low of day as an example. It's an excellent high percentage level. So of course we also talked about what to do with those levels, right? So we find a high percentage price level. We're going to watch for reactions around those levels. So for example, the high of day. I'm going to watch the high of day and look for the reaction. Okay, now the reaction is going to give me a clue as to what's going to happen next. Okay, we look for conviction, and that conviction now tells us a clear sign of direction, whether we should take the trade or avoid the trade. Okay, so the first step here, guys, was to find the price level. We'll look for the reaction. That reaction will tell us market sentiment. That market sentiment will lead to hopefully conviction to tell us to get into a trade, or lack of conviction, which may tell us to avoid a trade. So we know what the first step was of finding the price level. But we talk about finding patterns, right? We talk about finding patterns on the tape. And in step number 2, we're going to go over some simple patterns. And in this pattern, I want to talk about a technique that I call bracketing the tape. Now, for the first, we'll keep it very simple. I'm going to grab a time and sales window, and I'll watch it for 10 to 15 seconds. So this simple technique is called bracketing the tape. And we're going to look for patterns on your time and sales window that will help us determine market sentiment and look for trading entries. So open up a time and sales window, okay, connect to the market, say for example the crude or the gold futures, and then watch that time and sales window for 10, 15, 20 seconds. And you're going to create a mental bracket, or what I call the highest, right? The mental bracket meaning the highest and the lowest price you see. It's similar to bracketing out a sideways market. And then we're going to look inside that bracket for a failure, right? Or of course a solid breakout. Okay, so it's called bracketing the tape. Now here's an example of what it will look like here. Okay, so again, now this is going to be in your mind, right? Or maybe you've got yourself a pen and paper here, right? And you're going to keep track of this in a pad of paper. Now again, what I'm going to do here is I'm going to open up my time and sales window. I'm going to watch my time and sales window 20 seconds. And over 20 seconds, I'm going to mark the highest price that I see and the lowest price that I see. All right, so ready, let's go. After 20 seconds, I see the highest price is 100.10. The lowest is 100 even. Okay, just an example here. And so now what I'm going to do here is I'm going to watch as price goes in and out inside of this bracket. Again, it's a technique called bracketing the tape. On my time and sales window, I watch for 15, 20, 25, even 30 seconds if you want. Doesn't really matter. You can make it 5 minutes. And then you wait for the breakout, or maybe the failed breakout, inside of that mental bracket. Now I'm using an illustration here to hopefully show you guys what I'm talking about. All right, so we create our bracket. After 20 seconds, I've got my bracket. The highest price I saw was 110. The lowest price I saw was 100. So of course, what do? We start trading inside of this bracket. We trade at 100.01, right? Back down to double zeros, up to 04s. And now we're going to chop around inside this bracket here, right? As we chop inside the bracket, we're now going to wait for a test of the highs, right? Up to 100.9, right? Going to chop around, makes a decision. Now this is where that bracket we define is going to come into play. I defined the highest price that I saw was 100.10, 110. We're going to test that level once. It's going to push back. Now this is the key here. Notice the pushback. The pushback exceeds, right? The pushback exceeds this low here. See that pushback right there? It exceeds that low. Very important piece of the pie here. Because now what that tells me is this now takes the sellers out of the equation. knocks the sellers out, giving the buyers room now to trigger. All right, guys, this is a breakout pattern. Now, if you didn't see that, let's do it one more time. Okay, so here we go. I'm going to watch for 20 seconds. After 20 seconds is over, I define my 100.10, my 100.0. That's my bracket now. Now, inside of that, I'm sitting on hands. And I'm going to wait until my time and sales window shows me 100.10. Then I'm looking to react. But it's all about the reaction before it. Now watch what happens. We're going to start by chopping around the bottom. We'll consolidate in the middle, right? 100, 0, 3s, 4, 5, 6, 7s, up to 9s, 8s, 9s, 8s, right? Back and forth, back and forth. The buyers are trying to get their momentum behind them. Maybe they're trying to break resistance. They're going to now test the 10s. The test is the key. That's the first key. But here's where we know we're on the right side. When we see the break back below the lows. Notice how it goes from 100.10. It breaks below the 0.08s to 0.05, right? That kickback right here, that shakes the sellers off, right? Stops people out, and now we've got the clear go-ahead. There's your trigger. So that's a simple breakout pattern. Open up your time and sales window, guys. You will see this happen all day long. But guys, now that's not my favorite pattern, though. Here's my favorite pattern. And this is something, when you master this, guys, this is when, guys, your trading becomes very easy. Same situation now. Okay, we've defined our bracket, 100.10, 100.0. Now this time, guys, the key is going to be the initial breakout. Now watch what happens. This is sometimes called a fake out breakout, where you see an initial, they also call it a token print, where you see an initial breakout above the highs, right? Boom. But it's a very quick breakout. There's nothing behind it. And then when it comes back in, that gives us the short trade. Now here's it comes. We're going to see it consolidate inside the bracket here. Now watch what happens when it breaks out, right? It's going to go from in the middle. And this is what the key here is. It's almost like out of nowhere. And you guys know what it looks like. You'll see it, right? You'll know what it looks like. It boom, right? It breaks all the way out. Now what this is this is that final push from the buyers, right? Shakes out the buy side and now gives room for us to go to the sell side. The key here is this is going to look out of place. This move here looks out of place. We then see the speed pick up. We see large buy orders say not so fast. I'm sorry, large sell orders, right? Not so fast, right? They're gonna chop around a little bit here, and then all of a sudden, right? Remember, like I said, we shook off the buy side, giving the sell side the ability, right, to rock and roll. Let's go back and take a look at it one more time. Okay, again, this is the reversal pattern, and this is my favorite. This one's real easy. Okay, and the key here is watch the breakout, watch the break above, right, the highs here. Okay, we're going to start by chopping around the middle. We always, right, we see this all the time, right? Price kind of sits there fluttering around, and then all of a sudden, out of character, bam, right? And this will usually be no big buyers here. This is just this is a flurry of little tiny guys. Now, what this is trying to do here is this is either, of course, a little bit of market manipulation during low volume because it's going to look out of place. It bounces up. This is where we make our decision. This looks out of place, but now what looks even better is the speed picks up, right? We see a lot bigger size sellers coming in. That tells us the sell side is the right side. It shakes off the buy side, and now, of course, we make our swing low, and there's your two-step pattern short. Okay, but this, of course, on your time and sales window. All right, guys? So we looked at a breakout pattern. We looked at a reversal pattern. All right, and remember, guys, this is a technique called bracketing the tape. You're going to open up your time and sales window, 15, 20, 30 seconds. Make it a minute if you want, guys. It doesn't really matter how long you watch it, just to find that high and the low, and then watch as price fake out breakout, right? Or dancing, knocking at the door, and then boom, right? You see the break. All right, guys, now we get a lot more coming up next. Now, in the next video, we're going to talk about once you're in this trade, of course, to say how to execute this trade, to know when to pull the trigger, right? Do you pull the trigger right when you see it? How do you do it? And then we'll talk about trade management. So we're going to talk about building confidence, better entries, know when to hold them, know when to fold them, and of course we'll talk about managing your stops and targets. Guys, don't forget, come back and see us for the next video. This is the second one. We got one more coming. Bye-bye. See you next time. Bye-bye for now.